I don't see why, if the focus on the economy remains and if the seriousness remains, um, I don't see why these multiples cannot re-rate towards the long-term average. So I can't promise you, what's going to happen next month, but in general, I see, valid reasons behind the ongoing rally, and I think there is space for that rally to continue on into the new year also. The stock market is doing very well as we speak. Year to date, calendar year to date, we're up about 40%, and fiscal year to date, we're up about 15%. But recently there's been a lot of positive momentum. So of the 15% that I speak, that's the market's return this fiscal year. Just last week, the index gained 5.5%. So that, by any measure, is a quick bounce, right? And today, the first day of the trading week, it's that momentum seems to have continued also. So obviously, I think the market is doing well. That's what's been happening, and the reasons that I can ascribe to this is, these would be monetary easing, and I think the monetary policy is due, in the early part of November. And so there is expectation that there's going to be a sharp rate cut. And all of this is happening within the ambit of razor sharp focus on the economy. And I think that is what the market is responding to. That focus on the economy, monetary easing, cheap valuations, strong corporate results, and a lot of liquidity flowing towards equities. Look, I think in general, we are in the middle of a multi-year bull run. And what we saw from last year was simply a recovery trade. We were on the brink of default last year. We avoided that. And since then, we've seen that focus on the economy come through and seriousness on the economy come through. What I can tell you is that in a nutshell, when interest rates are coming down, it's something that is positive for equities and the stock market. And interest rates in Pakistan are on the way down. The policy rate is still 17.5%. It went as high as 22%, an all-time high. Now, the long-term average interest rate in Pakistan is about 10%. And so if we are going to see interest rates converge towards that long-term average, then you would expect that valuations in the stock market will also expand towards their long-term average. And currently, on average, our companies trade at 4.5 times their profits. So the value of all of the companies on average listed in Pakistan, at least on the KSE 100, let's focus on the KSE 100, is 4.5 times their profits. And the long-term average has been 7.5 times. So if interest rates naturally, if they will move towards their long-term average, you can expect the multiple that these companies trade at relative to their profitability to expand. And we're still at a 40% discount to that long-term average. So, I don't see why, if the focus on the economy remains and if the seriousness remains, I don't see why these multiples cannot re-rate towards the long-term average. So the short answer is, I can't promise you, what's going to happen next month, but in general, I see, valid reasons behind the ongoing rally, and I think there is space for that rally to continue on into the new year also. I think banks, obviously they are a part of this economy, and one of the reasons that they've been shying away from lending to the private sector is, of course, their own conservatism, but also a lot of private sector crowding out taking place because the government has been such a high borrower. And it's entirely logical for the banking sector to lend to the government in a risk-free manner, simply because the government is such a big borrower. But that could potentially change going forward because the government is focusing on increasing the tax to GDP, and the IMF program that is currently ongoing, the plan is to increase tax to GDP by 3 percentage points over the course of the program. Naturally, if that happens, then the government's fiscal deficit should reduce by a similar amount. which isn't small. And that means that its borrowing needs from the banking sector will probably reduce over the medium term. If that happens, then banks have a lot more liquidity available with them to lend to the private sector. It's going to take time. In the short term, I mean, naturally, look, let's not forget that the economy last year was under a lot of stress, and a lot of our sectors were under duress. And so you can't expect overnight for there to be credit appetite also. A lot of industries are still operating at very suboptimal capacity utilization levels. So there is limited appetite to expand as of right now. Banks will hustle a little bit to expand their loan to deposit ratios simply because if they don't do it by the 31st of December, they will face higher taxation. But I would probably categorize that more as window dressing rather than any real effort to increase lending in a meaningful way. It can happen over the medium term, provided the government is able to bring its fiscal deficit down and the economy is stable. Then naturally there will be incentive for the bank and push for the banks to lend to the private sector. In the short term, sadly, it's more of a window dressing exercise than a real representation of lending and borrowing dynamics in Pakistan.